Good evening, everyone, and welcome to tonight's webinar on Do More with Your Super. Thank you for joining me for tonight. So grab some dinner, maybe a glass of wine, and if you've got young kids, put Bluey on them or something else that will entertain them for the next 45 minutes. So you can join and listen to me about self-managed super funds. So we'll be starting in a few moments, just waiting for a few more attendees. So just like to introduce myself firstly. I'm Scott Morosky. I'm the Managing Director of the Self-Managed Super Fund team at McConaughey Steadman. I started with the firm back in 1999, so before GST. I worked as a trainee accountant in the business and tax services team originally, before moving into the specialist self-managed super fund team in 2006. I became a director in 2012. And yeah, I've been working in the self-managed super fund team since 2006 and now look after approximately 500 self-managed super funds. So what are we talking about tonight? So firstly, a quick overview of superannuation basics and the options that come with that. And then what we're all here for is what is a self-managed super fund and how can you use it if a self-managed super fund is for you. And then just talk about the administration and the options that you have within a self-managed super fund, and then the investments and insurance and things that you can have within a self-managed super fund. So that's sort of the agenda for today and what we'll be talking about, or what I'll be talking about for the next 45 minutes. So before we start any presentation, I need to give you these words that anything we do talk about today will be general advice and may not be specifically appropriate for your own personal needs. And before you act or make any decisions, I would suggest talking to myself or another qualified person to can examine your specific financial circumstances and give advice around the self-managed super fund or whatever your superannuation needs are. So, and we will talk about at the end of this webinar what are the next steps that if you do want to talk to somebody about possibly setting up a self-managed super fund, or at least just reviewing your current superannuation circumstances. So now that I've said that, let's get into the fun part, or the fun part for me, and let's start talking about superannuation. So what is superannuation? And often people will think that a superannuation fund is an investment, but effectively it is just a structure, no different from, well, structured no different from a trust or a company or a partnership. It's just a structure that you can house your investments. However, superannuation is a highly tax-effective environment for Australians to invest in their retirement. So the government, and they make no secret of this, have superannuation at low tax rates and encourage people to save for their retirement, as retirees are now living longer and requiring to have support from the age pension for longer. They want people to not rely necessarily completely on the age pension, and if they can encourage people to support their retirement by saving via superannuation, then yeah, they're giving tax concessions to encourage people to do that. So most Australians these days have at least one superannuation account, and if not more, depending on how many employers they've had over in the past. So when you start your first job these days, most people will be assigned a superannuation fund by their employer so that they can put contributions into that. And if you are one of those people that does have more than one superannuation account, I would strongly urge you to consider amalgamating those super into one account so that you're not paying multiple fees and yeah. So generally, the only way you know how much you have in super is when you get the statement at the end of the financial year, and I'll tell you the closing balance. There's not much transparency about what you've necessarily invested in for a retail or an industry fund, other than being able to choose whether you're in a growth portfolio or a conservative portfolio or whatever name they give it. You don't have much other choice as to the investments underlying or supporting your superannuation balance. So generally, we consider there's three different types of options for superannuation funds, and as already spoken about, the first one is a retail or industry fund, and for those, especially in Queensland, we've been familiar with QSuper or Sunsuper, who have recently amalgamated, but that's probably the most popular retail or industry fund. And the administration for that and for the investments is the trustee of the fund. And as I said, the investment choice is fairly limited to what sort of portfolio you want, and even some of those funds will dictate what the investments are depending on your age. So as you're younger, they might give you an aggressive portfolio, and as you get closer to retirement, they sort of pull back on that and add a little bit more conservatism to that. And generally, we consider anywhere up to $40,000 in superannuation they may be appropriate. Then, as your superannuation balance grows, you may want to take a bit more control of that, and then consider a master trust. So you still don't have the much control over the administration, but the investment choice is much greater. They'll give you a menu of investments that you or your financial planner can choose from, and you can start to specifically choose investments that you want your superannuation benefits invested in. So once you get over that 40 to 50,000, it's something to certainly consider. And then at the other end of the spectrum is self-managed super funds, which we're here to talk about today. And the administration for that is either yourself or your self-managed super fund specialist, i.e. myself and my team. But self-managed super funds give you the greatest investment choice. As the name sort of suggests, self-managed super fund, you're the one effectively taking control of those superannuation money and making the investment choices. And whilst it's not legislative requirement, the tax office do in their publication sort of suggest that a self-managed super fund should have more than 200,000 sitting in the self-managed super fund before it becomes cost effective. Now, the one thing to be aware of is that 200,000 doesn't have to be just for one member. You can have multiple members in a self-managed super fund. So you could have 4 members with 50,000 each, adding up to the 200,000, and that still is cost effective. So they're generally the 3 options that we talk about, and we certainly don't suggest that a self-managed super fund is suitable for everybody as soon as their superannuation benefits hit the 200,000 mark. If you're not interested in managing your own super, then certainly a self-managed super fund is not for you. But hopefully you're here today because you are interested in at least taking some more control in your superannuation benefits. So as the name suggests, the rest of tonight's discussion is about self-managed super funds. So what is a self-managed super fund? As I said, the name suggests, it's quite self-explanatory. The members get to decide how and when your superannuation benefits are invested, and you look after the administration and the investment decisions of the superannuation fund. So pretty self-explanatory. So at this time, more and more Australians are deciding to set up self-managed super funds to look after their own superannuation benefits. And as of September last year, which are the most current statistics we have, there's now over 600,000 self-managed super funds in Australia, and with more than 1.12 million members. So just below 2 members per self-managed super fund. So traditionally, people have assumed that self-managed super funds are for mum and dad or for husband and wife, but that's not necessarily the case. There's no requirement that that has to be, the way that your self-managed super fund is structured. So self-managed super funds, another sort of common misconception is that self-managed super funds are just for retirees. And with most of the growth in new self-managed super funds coming from the younger generations or those below age 45, and now over 13% of the self-managed super fund membership is now with members below 45. And as I said, that's the fastest growing age bracket in the demographics of self-managed super funds. And below 45, and then the next age bracket, 45 to 55, there's 20%. So close to 35% of members are now below the age of 55 and well and truly not retirees at this point in time. So that is sort of another misconception that self-managed super funds are only for those fast approaching retirement or already in retirement. And again, another misconception is that self-managed super funds are for the wealthy only. There's been plenty of media coverage at the moment around the potential policies for taxing people with higher superannuation balances in superannuation, and a lot of those people are members of a self-managed super fund, but we're not necessarily suggesting that self-managed super funds are just for the wealthy. So in a retail or industry fund, you'll be charged a fixed percentage of your account balance regardless of the balance. So whether it's 100,000 or $1 million, that percentage will still be the same, and we're talking somewhere between 0.5% to 1%. So on a $250,000 superannuation balance, you may be charged somewhere up to $2,500 for the administration of that superannuation fund or your account. So, 60% of self-managed super fund members have taxable incomes of less than $80,000 per year. So that certainly doesn't fall, in my mind anyway, doesn't fall in the category of wealthy people. So and just remember that self-managed super funds can have up to 6 people in that super fund now. So you can pool your individual superannuation balances and put that into an investment portfolio or into a property or whatever you decide to choose. And that doesn't, as I said before, doesn't necessarily have to be just restricted to your partner or anything like that. You can include other family members. It doesn't even have to be family members. It can be friends as well. So the only people you can't put in there is employees. So if you own your own business, and unless they're related to you, you can't have employees of your business also in that self-managed super fund. But as I said, you can pool up to 6 people in the one self-managed super fund and share those operating costs around everybody and quickly get up to that 200,000 mark. That's what the tax office gives that guidance to. So why do people, use a self-managed super fund? And there's a number of reasons why they do that, but I would suggest that the main or the predominant reason is for that investment control. People want to have that control of their superannuation benefits, and a lot of time outside of the family home, superannuation will be their biggest wealth vehicle that they have. So they want to be able to have control of that superannuation and the underlying investments around that, and really have a great understanding of what their superannuation is doing, rather than paying somebody else to administer and manage that on their behalf. So again, it gives people that flexibility, allows you to be more proactive in managing your investments. You have a great choice as to what you invest in. No other superannuation fund vehicle can allow you to directly invest in property of your choosing. You can't find a great commercial property with a really good tenant paying good commercial returns and go to your retail or industry fund and say, I want my superannuation benefits invested in this self-managed super fund. Is the only way you can do that. And with the ability to borrow in superannuation, it allows people to, I suppose, start that journey a lot earlier on than would have previously been allowed. So we are having members start with lower balances, using that superannuation money that they already have as a deposit on a certain property, and and getting into investment properties a lot sooner than they would otherwise be able to. Again, a lot of people we have as self-managed super fund clients have their business property, so whether it's their shed, their office, their farm, inside the self-managed super fund, and they're the best tenant that they can have or they could find is have their own business operating from that. So their business still needs to rent the property from the superannuation fund, but again, it just gives people that control to be able to to utilise their superannuation benefits within their business. So again, investment control. People are starting to be more conscious of ethical investments, whether that's gambling, alcohol, tobacco, how they deal with the environment. If they're companies that you don't want to invest in, again, retail or industry fund, they may have some sort of mechanism within their investment choices, but a lot of the time you don't have that transparency. So you can, within a self-managed super fund, you can be quite deliberate in who you choose to invest in. Whether if you're investing in, say, the share market or managed funds or things like that, you can be quite specific who you want to invest in. The tax concessions available to super are also available in self-managed super funds. So the general 15% tax on earnings is nothing particularly special in a self-managed super fund, but it does give you a bit more flexibility when people get close to retirement and their earnings is now tax-free. You can sort of have a bit more planning about how we allocate investments to particular members and start to work out how we can reduce even the tax inside your superannuation fund at even lower levels. Cost controls is probably a big one. As I said before, that a retail or industry fund or a master trust, they'll charge you a fixed percentage on the value of your superannuation benefits. So as your super grows, they will charge you a greater amount for administering your superannuation benefits. Whereas in a self-managed super fund, it's not necessarily the value of the fund that determines the cost of the fund. It's more so the investment mix within that. So I often use the example, if you've got a $1 million property, or sorry, a $1 million self-managed super fund investing in property, the cost to administer that will be pretty much exactly the same if it was a $5 million property in there. So just because there's a property in there and depending on the value doesn't change the cost to administer. So as you can see, the cost savings starts to increase as the value of the fund grows. And likewise, a self-managed super fund with a share portfolio of 50 different shareholdings will be more costly to administer than a self-managed super fund which solely holds one investment property. So it's more so the as I said, the number of investments or the investment mix rather than the underlying value of those investments. So as the value of your superannuation benefits or the group of superannuation benefits within the self-managed super fund grow, you'll start to see greater cost savings. And business planning, as we've already alluded to, you can use your superannuation benefits to invest in what we call business real property and use that property within your own business. Business still has to pay rent, but being able to operate your business effectively out of a property within that you own via the self-managed super fund can really give you some benefits to your business, and at times we can free up some working capital for the business as well. So do you need to be financially savvy to have a self-managed super fund? And I suppose the short answer is no. You only, at the end of the day, you only need to have the desire to take control of your superannuation. So when you do, or if you do decide to set up a self-managed super fund, you can get as little or as much help as you need from a team of specialist advisors or a financial planner. So we have a number of clients who have set up a self-managed super fund primarily to own a property, whether that's for their business or just as an investment property, and they're quite comfortable and have the knowledge to do that. But then through education or the desire, they want to diversify, so they're not putting all their superannuation eggs in one basket, just particularly in that property. So they may not be as familiar with the share market or investing in managed funds. So they may ask one of our financial planners to assist them with that side. There is a cost with that, but yeah, they're sort of delegating the other side of the investments in their superannuation fund to a specialist. So as the name does suggest, self-managed super fund, you still need to be actively involved with that, and I would suggest or recommend that you still are in regular contact and having meetings with the financial planner or the advisor on that other portfolio. But if you're looking at setting up a self-managed super fund and delegating 100% of the administration and the management of the investments in that super fund, then maybe a self-managed super fund is not for you, because you effectively just delegated all of your control, and the costs associated with that may not outweigh what you would have been paying in a retail industry fund or a master trust anyway. So you need that desire to take control of your super to some degree, whether that's 100%, 50%, 20%. Yeah, we can work with you on that. But yeah, if that desire to take control of your super is at 0%, then maybe we need to have a discussion about whether a self-managed super fund is for you. So how much support will you be given with your self-managed super fund? So as a self-managed super fund division and as self-managed super fund administrators, we can help you in a number of steps to help you with your self-managed super fund. And the first one, the obvious one, is setting up your superannuation fund. So getting the documentation that you need to set up a superannuation fund, registering that super fund with the tax office and getting a tax file number and an ABN for your self-managed super fund, and having those registrations in place so you can talk to your existing superannuation providers to get that money transferred into your self-managed super fund. They're all steps that we're actively involved with at the start of the establishment process. We certainly don't set you up with a super fund and leave you to do the rest. So, and then each year, after you've set up your super fund, once you've invested money, wherever that may be, then there's a requirement to prepare financial statements each year. And most people that have a self-managed super fund unfortunately aren't qualified accountants or have much experience in preparing financial statements for a superannuation fund, and that's one of our key areas that we do help clients with. And if you weren't aware, the only big difference between preparing financial statements for a self-managed super fund and other entities like a company or a trust is that the super fund financial statements need to be audited each year. So it's a two-part process to auditing the superannuation fund, and the first part is auditing the financial statements. So when we come to prepare financial statements for a client with a self-managed super fund, we need copies of all bank statements, all invoices, all investment income statements. So if we own shares, we need copies of the dividend statements, we need copies of the buy-sell contracts, things like that. If you own property, we need copies of the rates notice, insurance premium notices, repairs and maintenance, all those sort of things that we need to give to the auditor. So the first part is auditing the financial statement, but there's also a compliance audit where they go through the operation and the management of the superannuation fund and ensuring that it's being administered in accordance with the super legislation. And unfortunately, from time to time, clients do the wrong thing, and hopefully it's not deliberately and it's more accidentally. And I'm always encouraging clients to always seek permission before they do something rather than begging for forgiveness from the tax office just to find out where they are. But yeah, unfortunately, from time to time, clients do the wrong thing. And if the compliance audit identifies those things, they're required to notify the tax office. So we are involved with arranging that audit, managing that audit on behalf of the clients. And then unfortunately, if things do go wrong, we then are liaising with the tax office to manage that process, trying to rectify the issues and to work with the tax office to get the super fund back to a space where the auditors are happy going forward. And so once the financial statements are being prepared, audits arranging for the annual audit to be completed, once those two things have been done, we can then lodge the annual return for the superannuation fund. So that's a common process that we do for all of our 500 plus self-managed super funds. But we can also help you with looking after your pay-as-you-go or your GST or your activity statement obligations, and can help you on a quarterly basis or whatever basis that is on. So we can help you with that as well. And then also our financial planning team, not specifically me, but within McConaughey Steadman, our financial planning team can help investing in managed funds and advising on insurance inside super. So we can help you with that process as well. So we're always there to provide support for all of our superannuation clients. It's not as I said before, not a set up and forget, where they're always available to help clients with whatever they need as part of their self-managed super fund administration. Are the investment risk greater in a self-managed super fund versus a retail fund? And as I said before, it's not the structure that's important, it's the underlying investment. So neither is inherently more risky than the other. It's more the underlying investments that you have within your superannuation benefits. And self-managed super funds, and again, we've seen a bit of growth in self-managed super funds for cryptocurrency. It's not something I'm giving advice on, but again, self-managed super funds is a vehicle that you can do invest in cryptocurrency through, and that may, I would suggest, increase the riskiness of the investments, but it's not a self-managed super fund versus retail fund decision at that point in time. It's the underlying investments. So yeah, it really depends on what you invest in rather than the vehicle that you're used for to decide to invest your superannuation benefits. And as the old adage goes, while higher risk can lead to higher returns on average, also the flip side also happens that riskier investments can also magnify the level of losses that you have with inside your superannuation if they're invested in more riskier investments. So we need to manage that risk, and we can do that through diversification and things like that. So commonly, when we talk to people about their investment strategy for their super fund, a lot of people are happier to forego some level of return in an effort to reduce the possible losses in the future. So people are more risk adverse when it comes to talking about losses rather than investment gains. So the University of Adelaide conducted, and just to come back to my point here, is the University of Adelaide conducted research into self-managed super fund returns in February 2022, and it found that the appropriate level of diversification can be more easily achieved with balances of more than 200,000. So that's, again, one of the reasons why the tax office in their publications use that 200,000 mark. Obviously, if you're needing that 200,000 to buy a property, or at least use as a deposit on to buy a property via a borrowing arrangement, then we're not well diversified in that first instance. But over time, as I said, as additional funds build up, then we would encourage you to look at diversifying investments in other areas. And then self-managed super funds with balances of more than 200,000, excluding those concentrated in cash or term deposits, outperformed APRA funds in 2 out of the last 3 years between 2017 and 2019. So APRA funds are all other funds, superannuation funds, not administered by the tax office. So the tax office only oversees self-managed super funds. So all other superannuation fund vehicles are managed by APRA. So we've sort of touched on this previously before, but what can a self-managed super fund invest in? And these includes all types of property, so residential property, commercial property, business property, farming property. It doesn't even have to be property that has a return or a rental return. People are buying vacant blocks of land with future capital growth potential. So there's no requirement that the property must be earning a regular income or rental income. We can invest in listed shares, whether that's Australian shares or overseas shares, whether that's in the US market or whatever market or emerging Asian markets. We can invest in listed shares. There's even the opportunity to invest in unlisted companies, and there might be requirements around. There's definitely requirements around investing in shares in a related company that you've operating your business. But if there's other opportunities out there, then we can invest in unlisted shares. And a common one for our financial planning team is managed investments, to try and get a greater degree of diversification with a limited pool of money. So managed investments. They always say cash is king, and that's always available. And now that interest rates are starting to increase back, whilst it may not be good for borrowers, certainly those people with term deposits in their self-managed super funds are actually appreciating those interest rate rises at the moment, as they're getting some sort of benefit from the increase in interest rates. We can have bullion, whether that's gold or silver. People are investing in that if they're unsure a bit of the volatility in the share market at the moment, and whether that's through a dealer or whether that's directly holding bullion in a safety deposit box at a bank. That is something people are doing. As I alluded to before, super funds can do cryptocurrency, and it's really the only vehicle that you can, if you want your superannuation benefits invested in, that it has to be via a self-managed super fund. There are a multitude of other investments you can do. Whilst there's rules around artworks and collectibles, you can still do that. We've had people who have invested in collectible cars and things like that. There are rules around that, and if you do want to invest in those, I would certainly suggest, as I said before, ask for permission first and find out the details, rather than going out and investing and finding out you haven't done it right, and we're now needing to rectify the super fund. But I suppose the opportunities for investing in self-managed super funds is quite unlimited. In saying all that, when we talk about super fund investments, we always need to put over the top of that what we call the sole purpose test. So any investments we have inside a self-managed super fund need to be for the sole purpose of funding for your retirement. And the easy example of that is residential property. There's nothing to say that we can't own a holiday unit down at the Gold Coast or the Sunshine Coast, and we can certainly do that and receive the rental income. What we can't do is we can't decide to stay there and enjoy it over the Christmas or New Year period, because we're getting a secondary benefit there. So that's an example of residential property. There is that allowance for business property, though, to be able to use that within your own business, as long as we're dealing with it on what we call an arm's length basis. So we're paying market rent. We're dealing with the super fund, or the business is dealing with the super fund as though it's a tenant landlord relationship, like with anybody else, with myself or anything. But at the end of the day, yeah, any investment we make needs to meet the sole purpose test, and that's the overarching rule that the tax office uses when considering, I suppose, more slightly unusual investments within the fund. So it's something we need to consider. And one of those big issues is what the tax office considers loans. So yeah, loaning money to the super from the super fund to whether it's yourself or the family, there's a secondary benefit there, and that's a big no-no. So it's always something we need to consider. So that's a very quick introduction to self-managed super funds, and I've gone a little bit shorter than the 45 minutes I promised. So you might have a bit of the night back to yourself a little bit earlier to do what you want to do, enjoy the rest of your night. But where to from here? So anyone who attended live tonight or who are registered to receive a recording of this presentation, we're offering a 1-hour consultation to new clients, so to those people who don't already have a self-managed super fund with me. If you do have a self-managed super fund but it's not with McConaughey Steadman, that 1-hour consultation also applies to come speak with myself and one of the advisors from our financial planning team to discuss if setting up a self-managed super fund is right for you. And I will say, if we don't think a self-managed super fund is right for you, we will certainly let you know that. I don't want to be working with clients who are always having issues with the tax office, or I said before, aren't ready to take some level of control of their own superannuation benefits. If you're just wanting to delegate that out, then there's better structures available for you. But anyone who's interested in setting up a self-managed super fund, that 1-hour consultation is available. And yeah, please feel free to call our office and arrange that 1-hour consultation with us. One thing that we will ask you to bring to that meeting is details of your existing superannuation benefits. This is always an important part of the conversation. So if you can come, prepared to that meeting, that will just sort of assist us with that. So yes, that offer is available to all people who have are participating in this webinar, or at least registered to receive that. And I'm happy to extend that invitation or offer to family and friends as well. So please feel free to pass on my details to anyone else who might be interested in setting up a self-managed super fund. There'll also be a free ebook available about investing in property through a self-managed super fund. That will be available by clicking on the link in the chat. If you're listening to a recording, please contact us and we can arrange for that to be also sent out. But I think these days a large majority of the self-managed super funds that we're setting up for people are with the view of buying property via their self-managed super fund, whether that's directly or via a borrowing arrangement. People are looking to using their superannuation benefits to invest in property. So we've got a small guide there, the ins and outs of investing in property through a self-managed super fund. So please access that by clicking on the chat, which I've just put, or as I said, if you're watching this via recording, please contact our office and we can get that sent out to you. Where to get in touch? I'm in the Toowoomba office. My office there is on the top floor, just behind the closest McConaughey Steadman sign there. So not that probably means too much, or probably a bit of useless information for you. But please get in touch, with our Toowoomba office, or email me directly. I am available for travel. I'm regularly visiting the Clayfield office, and more recently If you're familiar with technology, and maybe you are if you're watching this recording or watching it live, I suppose, then we are happy to also do meetings via Teams if you're not available to come to one of the offices. So that is available. Our preference is to meet in person, but yeah, we understand everyone's busy and our lives are all hectic. So if that's not available, happy to meet via Teams, and we can send out an invitation for that. So yeah, if you are interested in the self-managed super fund, please get in contact. Make a time to meet with myself and one of the members from the financial planning team, and that offer is available for that first initial 1 hour free consultation. So if there's any other information you want to know about self-managed super funds, please look up my section on the McConaughey Steadman website. And it would be remiss of me, and I'd get in trouble from the marketing team. Please follow us on Facebook, Instagram, or LinkedIn, and find out what our other things McConaughey Steadman are up to, or the services that we offer. So finally, I'd just like to thank you for your time. As I said, I know we're all busy and hectic lives, and finding the time to join this webinar tonight, I greatly appreciate, and hopefully you got something out of it, and are interested in setting up a self-managed super fund, because it is a big pot of wealth for you, and I encourage everybody to take an active interest in their superannuation, and may not be via a self-managed super fund at the end of the day, but yeah, it's our retirement nest egg, and it should be important that we need that to retire on. So I just encourage everyone to take interest in their superannuation. So again, thank you for joining the webinar tonight. It's greatly appreciated, and I look forward to talking to you or meeting with you in the very near future. So I wish you all the best for the remainder of the night, and hope you all stay safe and well. And I thank you very much.